For novice traders and investors, reading charts can seem like a daunting task. Consider a market analysis tool like a candlestick chart. A candlestick chart is a type of financial chart that displays information about the price of an asset for a specific period. A candlestick chart consists of candles that show opening trades, the first registered trading price of the traded asset. The highest price is the highest registered price. The lowest price is the lowest recorded price. The losing is the last recorded trade price. The candlesticks are easy to read and represent the movement of the asset price. In practice, candles show resistance between bulls and bears for a certain period of time, and the longer the body of the candle, the stronger the buying or selling pressure. If we consider the classic version of the candlestick chart, then the green candlestick body means that the asset price closed above the opening price. And if the body of the candle is red, it means that the candle closed below the opening price. A candlestick chart is a fundamental trading tool, but it has its drawbacks. For example, candles cannot provide all the information for a comprehensive analysis. They lack intermediate information between opening and closing.